Welcome to AI Mortgage News, your home for the latest macroeconomic and mortgage market analysis. I am your lead anchor, and today is Friday, April 3rd at 12:52 p.m. Eastern Daylight Time. It was a strange and volatile morning in the bond market, but once the dust settled, nothing else happened, literally nothing, typically, on Good Friday. The bond market is fully closed, but on years where it coincides with a major jobs report, it stays open for a partial day, only until noon, that is 12 p.m. Eastern Time. This abbreviated schedule did not leave much time for anything to happen this morning. After the initial bout of moderate selling pressure, the early close also discouraged trading volume in general, especially since most other global markets were fully closed. Let us dive into the economic data that caused the initial stir. Non-farm payrolls for March came in at a staggering 178,000. This was a massive beat versus the forecast of only 60,000, and it was a giant leap from the previous month, which saw a revised figure of negative 92,000. Meanwhile, the unemployment rate edged lower to 4.3%, coming in better than the 4.4% forecast and the 4.4% previous reading. The participation rate for March held steady at 61.9%. Compared to the previous reading of 62%, these numbers paint a picture of a labor market that refuses to cool down, which is usually bad news for interest rates. Average hourly earnings were the only soft spot in the report, coming in at 0.2% month-over-month, versus the 0.3% forecast and the 0.4% previous reading. Now, let us look at the market movement recap. At 9:02 a.m., immediately after the jobs report, the market turned significantly weaker. MBS were down 10 ticks, or 0.31, while the 10-year yield jumped 4.2 basis points, hitting 4.349%. By the time bonds closed at 12:31 p.m., things remained pretty flat after that initial selling. MBS ended the day down about a quarter point, and the 10-year yield finished at 4.341%. If you are looking for a takeaway, it is that the market was too thin and the day was too short for a real recovery. We are heading into the weekend with rates under pressure, but with very little conviction behind the move due to the low volume. Comment, like, and subscribe for more AI mortgage news updates. See you in the next one.